So I might just start with the convergence issue, and with you, Lutz, actually. Obviously, convergence has kind of really expanded over the past few years to go way beyond kind of like the whole idea of selling fixed and mobile together. Maybe you could kind of tell us a little bit more about kind of how broadly you're looking at the convergence piece and what you're looking to get out of it.
Yeah, so I think as most of you know, O2 and Virgin Media merged because of convergence. We have then just 4 months after the merger launched Volt. We have now 2 million converged customers on it. They have a much lower churn, they have higher ARPUs. And we are absolutely focused and excited by convergence. The way we drive it is that we collect all our customer data in one place, and we have digitalized and personalized the offers. And so we understand our customers better, we get to personal pricing, and therefore we will start selling also stuff beyond connectivity, right? I mean, I'm not going to share what we will be selling here, but watch the space. It's clear, right? Every second household is a customer of ours. Customers not only are looking for connectivity, they look also for broader services that hyperscalers are not able to target locally, and this is where we are going.
Mm-hmm. Okay, great. And Robert, I guess kind of for you, convergence kind of is to a large extent kind of fixed wireless access. Is that?
Karen, you've got to stop calling it fixed wireless access. It's a real technical name. Andrea probably came up with that, you know, an engineer. It's really fast home broadband using 5G. And, well, it's a new product. It's a new product offering customers. It's going to be great. It's great value. It's great speeds, much faster than existing wireless broadband offers, and as good as fiber. So we see a real opportunity there. And it's not just about convergence. It's just a new product offering to the market. If you look at convergence, I mean, the jury is out as to whether it's succeeded or not. It's probably at max 20% in some markets. So we just see FWA, 5G home broadband, as a real opportunity. And it is a driver for growth for us, as we know at the moment. It's contributing a third of our overall growth. So it's already been really successful there. But it is limited in terms of your 5G footprint. And clearly, in our case, you know, rolling out more 5G, we've come to the end of that, and we're hoping that with the new merge with Vodafone, the merger with Vodafone, should that get approval from the CMA, then we've got great plans to roll 5G right out across the country to places where fibre cannot get, and to provide speeds that are going to be 6 times faster than current speeds, 700 megabits per second. And if you look at in the US, you know, I'd ask the audience, do you know what % of broadband last year was 5G home broadband? Any hands up? No? 90%. That's a difference that it made over there. It's massive. And that difference has come about through the merger in the US, which then predicated huge investment in 5G. So I see 5G home broadband as a real opportunity for us. It's a real opportunity for the UK as well in terms of getting really fast broadband to places where fibre cannot go.
Mm-hmm. Sounds exciting. And kind of, Andrea, kind of from the technology side, kind of, do you see kind of like convergence of networks kind of presenting opportunities for you?
Absolutely. So if I look at the question of convergence from a technology standpoint, we've had various Gs, generations. We started with frequency division multiple access, then we moved to TDMA, and then CDMA, and now we're in OFDM. And if you take a step back and look at what's coming out of academia, there won't be another radio access technology that will be invented. So fundamentally, we will be building the future networks, not necessarily in the next G, but the future networks on the same grid, which means what could 6G look like? It will probably be our existing networks that are completely integrated, automated, software-defined, completely interoperable, and therefore you've got a very strong technology base in which to do the things that Lutz and Robert says, cross-selling across your customer base, getting that volume of customers that will enable you then to reinvest into the network, which has its challenges. So you need that greater customer base. And also, more importantly, what we've seen is with that convergence, you get loyalty. You get a lot of our converged customers are very, very loyal, which enables us to have a bigger outlook in terms of our investment cycle. more confidence for us to be able to invest in the network. So naturally, the technology is evolving towards a converged network. And on top of that, you can cross-sell more easily because the underlying infrastructure is converged.
Yeah, we definitely have seen that. And on the cross-selling issue, a question for you, Lutz. We've seen when BT launched their EE platform that they made the decision to move towards a bit more of a single brand, certainly to prioritize one brand. As you look at lots of convergence in adjacent industries and you're investing a lot in your systems over this current year, are you going to take a fresh look at the various brands that you have across your different products?
So we are operating with 3 brands at the moment, right? One is GiffGaff, which is looking more at the value segment very successfully. On the mobile side, it's O2, I think, right, one of the most popular brands in the UK. And then Virgin Media still has a very, very strong heritage for broadband speed. So if households want to have the fastest broadband, they choose Virgin Media. Virgin Media household is surfing at 350 Mbit speed, and although there is no more fiber in the country, the average consumed speed in the Virgin Media household is growing faster than anywhere else. So therefore, we have 3 brands which are very, very strong, and I don't expect any changes in the future out of that. So we are using these brands in a targeted way, and that maybe would have been a question for Alison, how well EE is performing in the broadband space these days. That's the question.
And you've also got the convergence brand Volt. Is that something that's going to stay with us?
Yeah, Volt is obviously when you have a fixed brand and a mobile brand, and you open a new category, then Volt is what we have chosen. There is some internal questions, some work. We also, I think we have the most successful and a lot of times copied loyalty program called Priority. And the question is how we will get that better together in the future, and we are working on that.
Mm-hmm. Right, good. So we might just move on to the elephant in the room, consolidation. And I might start with you, Maurice, if that's okay, to really ask the question, has anything really changed since the proposed merger of O2 and 3 was blocked back in 2016?
That's eight years ago that deal was blocked. One thing that hasn't changed over the last 8 years is how investors look at telecom companies and investments. I spend most of my day talking to investors and who look to invest in telecoms globally, but they can invest in telecoms in the UK, globally, or in fact other sectors. And they're always drawn to sectors and companies that can produce solid returns on capital employed. And we've seen from earlier speakers around the lack of return on capital employed for the telecom sector, but also specifically in the UK. And that holds investors back from supporting investments. So whereas since the deal fell apart with the O2 Hutch deal, you have seen significant investments in fibre. On the mobile side, you haven't seen the same kind of investments. And as a result, as we've also heard in previous presentations, the 5G networks we have today aren't what they should be. But the investors are not willing to back the investments unless they see the route towards improvements in return on capital employed. The good news is, having looked at many mergers over the past years that I've been doing this, you have seen the attitude of regulators and politicians change from just a focus on price to actually a focus on the need for quality. It needed a global pandemic in some cases to get that realization of the importance of connectivity and not just price. But I think the hope is that will be the focus of the upcoming deal. Just one data point, I was looking earlier, if you look at mobile service revenues since the deal failed, in real times, they've declined by between 20 and 30%. So that, if low pricing is what the regulators want, that's what they got. But, is what we really want is better quality networks, is the question they'll have to ask themselves with this merger.
Mm-hmm. Okay. And Andrea, you look like somebody who wants to pick up on that
yes.
point about more investment in networks.
I wanted to touch upon the question you asked, what has changed? There's a couple of fundamental things have changed. We need to remind ourselves that this merger is creating a company that's substantially smaller than the one that was initially proposed 8 years ago. And that today, whether we like it or not, I certainly don't, Robert doesn't like it either, Vodafone and Three are respectively third and fourth in the market. What else has happened? A lot of the things that the European Commission could not predict have happened in our industry. Our industry has evolved tremendously. We've had this, the rise of MVNOs. You look at certain MVNOs today in the UK, Sky and Tesco Mobile, to quote just two, they're a force to reckon with. They're very, very intensively commercially competitive in the market. We did not have that dynamic back then. 27% of market share sits with the MVNOs today. We have two scale players that are carrying 90% of the MVNOs. The merger will enable us to provide the much needed capacity in the UK to give optionality to the other MVNOs, and there's quite a lot that need that optionality. But also very important, in 2019, we launched 5G. Today, in order for us to be able to launch a broad 5G network and a full 5G network nationally, you need to have about 27 to 30% market share. That clearly points to a four-player market not being feasible and not being a healthy situation to be in, where the scaled operators, the subscale operators, don't have the return on investment.
Mm-hmm. And actually, just to come in on that, if you go back to the merger that was blocked and what the European Commission said Three would be able to do, did not materialize. Not from want of effort, it just did not materialize. And we've brought that to the attention of the CMA. But if you look where the market is today, and you've got a four-player market, but it's not a four-player market. And I've called the market dysfunctional because it is dysfunctional. You've got effectively a duopoly. You have the top two players controlling 95% of the free cash flow, the EBITDA minus capex in the industry. And you've got the bottom two players, Vodafone and ourselves. Vodafone a slight return, us a negative return. So negative cash flows after capex. And that's just not sustainable. This is a scaled market. And I'm not surprised that Alison earlier said, well, a four-player market works in Sweden, because if I was in her shoes and BT, where I'm one of those big players taking a large chunk of the free cash flow, I wouldn't want this market to change either. Because what's going to be created with this new merger is a very, very strong competitor to the two big players at the moment. And that's good for competition, it's good for consumers, and it's good for investment. And if you look at where the market is today, again, Alison mentioned that the UK is behind Sweden, and there was a bit of a gasp in the room. But there shouldn't be, because the UK ranks behind pretty much everybody out there. In terms of it ranks 21 out of 25 in terms of European countries of quality of infrastructure. The best network, BTEEs, ranks 66th out of 90 in terms of mobile networks that have been pulled. In terms of London as a city, out of the top 10 cities in the world, it ranked 10th in terms of quality of mobile infrastructure. That's not where we should be. Where we should be is in that upper quartile, if not leading. And what this merger does, it creates the competition to allow everyone to actually up their game. And in a rising tide, all boats rise. And we saw that in the US. Tsunami of investment when T-Mobile and Sprint merged in 5G. And that's what will happen here. And we're committing to build out the biggest, the fastest, the best network that the UK has seen and will see. And take the UK right up to the forefront, which is going to be good for competition.
Right. Yeah, sounds very good. And I suppose the question that springs to mind really is, to what extent does the CMA care about how good your network's going to be? Don't they kind of really focus on the impact that there will be on competition?
Well, the CMA rightly focus on the impact on consumers, but in terms of impact on consumers, they're going to get more, in terms of what they get. So in terms of value, they're going to get better value, and we see that. But do consumers want to pay a really, really low price and not be able to make a call? That's just not where anybody wants to be. So I think quality is quite important as well, and is taken into account, in terms of what this merger will deliver.
Robert is absolutely right. When we look at the statistics, Robert is absolutely right. When you look at the statistics, the customers truly care about network quality. They choose an operator based on quality. They decide to leave an operator based on quality. It's at the forefront of their decision-making process. We've seen that. Quality in a network is measured by different dimensions. It's not just about coverage. It's not just about capacity and congestion and latency and availability and reliability. It's all of the above. And if you look at what this merger will allow the UK to have, is on the 5G side of things, we'll have 2.5 times more capacity than you would otherwise have in a standalone setup. 2.5 times. 65% more capacity by 2029. That will enable more optionality for the MVNOs. It will also incentivize the MergeCo to price more aggressively because you've got that capacity to fill in. So you will inject more competition. The coverage will increase from the current terrible statistics we heard in the UK to 99% of the population coverage in 2034. That's 95% by 2029. And it's not only about 5G, Karen. It's also about 4G. We mustn't forget 4G. Today, we've got lots of not spots in the UK. We go out on holiday, we catch a train, and we're not able, Alison's experience in Sweden, we're not able to do that in the UK. With the merger, a quarter of the not spots in the UK will completely be resolved from day one, and 7 million subscribers will get a benefit. Your 4G geographical coverage will increase from 88% when we complete SRN, Shared Rural Network, which is a partnership with government. It will go to 91% in 2025. That already exceeds the government's target to achieve 90% by 2027. And I could go on, I'll stop here, but there's a whole list of benefits that this merger will bring to the consumer, to competition, and to the country.
I think
sorry, one other point. If I and again, referring
Lutz
back
is loving this.
Sorry,
and they're very keen
just
on this
referring
merger.
back to, could we get the same...
Not a CMA in front of us.
Just practicing. But just referring again to what Alison said about, you can get the same savings by having network shares. We're already in a network share. You can't get the same savings there. We'll be able to get efficiencies and synergies out of retail, in terms of retail stores, in terms of back office people, lawyers, less lawyers, thank God, less accountants, etc. So all of those come through a merger, less marketing spend, etc. So you just, less than 50% of the efficiencies that we're getting out of the merger come from the network side. So it's just a fallacy to say you can do this through a network share. It cannot be done.
Andrea, do you have another idea on this?
I've got one final question for Andrea, though. The CMA has already said those investment plans all sound great, but really how can we be sure that you're going to follow through on it? Are you not going to just seek to improve your shareholder returns really quickly?
It's a good question. It's a valid question to ask. Our whole joint business plan is predicated on an investment of £11 billion over the next 10 years, with £6 billion of those investments in the first 5 years. We have to build a best-in-class network to compete with the current BTE network, to unlock those additional revenue synergies that will enable us to leverage the scale that we get and deliver on our joint business plan. And it's synergies that don't only come from the network, decommissioning the masts and the assets we don't need, but it also comes from the synergies of all the other parts of the network, of the company. Your retail synergies, your people synergies, your process synergies, etc. We have to follow it through. And we can't shortchange ourselves because we need to invest enough to keep ahead of the competition. And our idea is that will incentivize everyone to continue investing and bring, finally, the UK out of this low equilibrium investment environment and a high equilibrium pro-investment that takes the network performance of the UK to the next level. We're not worthy of the 20th place out of 25 in the UK, in Europe.
Mm-hmm. Yeah. Sounds expensive. Lutz, are you going to have to start spending a whole lot more money on your network to keep up?
Well, I mean, it's clear that Andrea and Robert are pitching for the merger. Look, Virgin Media O2 is in a very strong strategic position, right? We have a very good mobile network, we have a fixed network. By the way, most of the MVNOs you mentioned, all of them actually you have mentioned, are sitting on our network. We are supporter of that.
That's not good, by the way, for competition. Sorry, that's...
You don't win the battle with regulation, you win it with customer centricity. But I want to support you guys. I mean, look, the other country I know very well is Germany. Germany went through a 4-to-3 merger. There's still a lot of competition for consumer. There is 2 players who do fixed mobile convergence. The other player is doing fixed wireless access, surprise, surprise, and everybody's happy. So, I mean, to put it straight, with 20% market share, investing in 5G to have a good quality and be able to compete in the long term is simply impossible. So therefore, I support that, but we are not changing our strategy, and we are also not changing our investment profile because of you guys. We have to keep our MVNO customers satisfied, and they are very satisfied with us. We have to we're investing more in our mobile network because, the brand O2 stands for quality, stands for trust and joy. This is what we have to continue delivering that. We are investing billions over billions in fiber, and we will end, in our case, and it shouldn't come across being complacent, but what the strategic position of VMO2 puts us, we have the scale to be 1 out of 2 fiber players in the market, and for sure 1 of most likely 3, I would say, 5G players in the market. And then still you can't assume you are in a monopoly. You have to be competitive with your investments. So therefore, we are not changing our 5-year plan, but we are investing 2 billion a year, and we will keep doing that.
Still a long way to go. Yeah. Morris, can I just, you've seen a lot of these mergers happen throughout Europe over the past several years. What have you seen in terms of synergies delivered or otherwise?
Yeah, so if you look across some European telecoms over the past 15 years or so, there's been many transactions, mobile, fixed mobile, fixed and fixed. If you take mobile mergers, you typically see between 10 and 15% of the combined cost base that can be delivered through just cost synergies alone, so a huge number. When you have fixed and mobile mergers, it's slightly smaller at 5 to 10% because of the less amount of overlap you have in terms of that infrastructure. One of the really interesting things as an external observer looking at the performance of many companies who go through mergers is they promise huge cost synergies at the time of the mergers and will always claim they've delivered them. In fact, I've yet to meet a telecom CEO who hasn't claimed to have delivered on their cost synergies. But if you look at the financial performance 5 years out, a lot of these merged companies struggle to deliver on the results which were expected of them at the time of it, and that's often due to the remedies. So often you've seen too many times a competition authority requiring onerous remedies, whether it's the recreation of a new mobile network or a wholesale remedy, which results in a depressing of the overall market revenue. So in Italy is a highly often used example where service revenues fell by 30% in the introduction of Iliad, which got a remedy as a result of another merger. So I think when it comes to thinking about the deal itself and success factors, it's not just the cost synergy which will help, I think, drive the investment that's needed to get that 11 billion, but the remedy that comes out and how the CMA thinks about that. The good news is, in Spain, you've seen a deal recently completed with Orange and Masmovil. So you've had basically 2 mobile fixed operators combine their networks. And the European Union, who looked at the deal, didn't seem to require the recreation of a 4th mobile network. So the remedy taker, in this case Digi, a Romanian company which builds fibre and has an MVNO in Spain, just as an extension of its contract and some spectrum, but probably not enough to build a network. So the hope is there is actually a bit of a change, not just from regulators and the industry and investors, but also from the competition guys.
Mm-hmm. On that issue of remedies, Lutz, kind of you say you're supportive of the merger. Would your view change if there was a remedy requiring a new entrant in the UK?
Well, I don't know what kind of remedy we are talking about, right? But I think it's also public knowledge that we need to have a certain spectrum, and we are sitting on a network sharing agreement with Vodafone, and we are dependent on that, right? And so therefore for us, these 2 topics need to be solved. to really sustain the future of Virgin Media O2. But other than that, it's very speculative, I would say.
And I think a question for kind of the industry, and I think for the CMA, Robert, is kind of what happens if this merger is not approved?
Well, if this merger doesn't get approved, then nothing changes. The UK will still rank lowly amongst its peers. In terms of investment into the UK, it will again rank lowly because people want quality infrastructure when they're investing, and investment will go elsewhere. Customers will be shortchanged. They will not get the quality that they need and that they want and that they deserve, because we will not, the two smaller players will not be able to afford to roll out the network to the level it is at, and the two big players won't have the incentive to do so because there's no competition, so they don't need to do so. In our case, we're negative cash flows. We will have to look at our spend. We've already cut our capex, that's public knowledge, from the 750 million level, but that the other operators are roughly at. Significantly, because we just can't afford. We're in negative cash flows after being in the market for more than 20 years. That's just not sustainable. So we have to come to a situation where we will be sustainable. We're not going to pull out of the market. Clearly, we've invested a lot, but we will regionalize, we'll marginalize. And when I say regionalize, I don't mean geographically, but we'll just have to be very careful what we spend, and we will not be able to, afford and to maintain a network at the same level as our competitors. So you won't have a four-player market either. You'll have, again, a continuation of the duopoly, the two strong players and the two weaker players, and unfortunately the customer and the consumer will suffer as a result of that.
Mm-hmm. Sounds like a strong case. We have some time for some questions for the audience, which I hope we will have. Do you please raise your hand if you have any questions? We've got some roaming mics. We've got over here, please.
Thank you very much. Thank you for the opportunity to ask a question. It's David Wright. I head equity research at Bank of America. A quick question. I feel like the industry tells a little bit of a white lie on 5G. What is the real 5G coverage, full 5G coverage Vodafone 3 and O2 currently has in the UK? Not 5G just to the antenna and into a 4G core. What is the real 5G coverage? And second of all, my question on fixed wireless access. It has been extremely successful for T-Mobile US, but of course they have what they call this fallow spectrum. They have excess spectrum. In the proposed merger, are you expecting to keep your combined spectrum? And if that were not the case, does that scale back the fixed wireless access ambitions? Thank you.
Yeah, perhaps, Andre, you might want to take the question on 5G.
Yeah, I'm not sure I understand your question in terms of the white line, in terms of coverage. What do you mean by that?
Not.
Oh, okay, without getting too technical, that depends on how you've deployed and how you have realized the 5G. So I can speak for Vodafone. 5G have deployed what we call 5G build right, and that's massive MIMO antennas that give the full experience of 5G. We were also the first to launch 5G SA standalone, which is the true 5G that has the inherent characteristics.
That's my question. What is the standalone
5G SA? So in simple terms, the 5G that you're currently seeing, which is non-standalone, is an evolution of 4G. It's got a 4G core, the brains of the network, and you're building on that. And it is 5G, it's a new technology, but it's not the full-blown 5G that standalone gives you. What Vodafone have launched through their 5G Ultra brand is 5G SA, which is true 5G. The difference is better download speeds, better battery longevity, lifetime during the day, and also you are able to start delivering the enhanced features like network slicing, dedicating a particular part of the network to a particular function, and you can tune it the way you want it to do. What speeds, what latency, and also delivers better latency, less than 10 milliseconds per milliseconds. So if you're doing a critical network infrastructure service on a particular vertical, like for example robotics or engineering, and you need a response time that is guaranteed below a certain response time, you can get it guaranteed by 5G SA. You don't necessarily get it to the level that you require on NSA. So that's the difference between the two.
And what is your coverage of standalone 5G?
So we've launched from 20 cities in the UK. We started in London, Manchester, Birmingham. We did the trials, and we have covered 20 cities in the UK with SA. Again, we need the scale that the merger requires to extend it beyond the cities. Otherwise, we'll stop, and we'll only have enough money to deliver that SA in the cities. And that's a shame, because in order to unlock the investment gap that the wireless infrastructure strategy government has written, there's 25 billion of investment gap in order to deliver the full wireless infrastructure strategy. We need to deploy 5G SA nationally, because it doesn't make sense to deliver a service, a slice, to a transport company or to a logistics company, and it being only available in 20 cities. The trucks are not contained in the 20 cities. They go to the Outer Hebrides, they go to Inverness. And having that national footprint is the only means of unlocking that inherent characteristics of 5G SA.
And on fixed wireless access, Robert, you want to pick that up?
Well, just I don't know where the white lie is coming from. I mean, we don't have standalone 5G, but the current 5G that we have, that Andrea has eloquently explained far better than I would, is far, far better and far superior to any other mobile broadband product out there, delivering speeds 100, 200, 300 megabits per second, depending on where you are in the geography, etc., and competes well with fiber in that regard. So standalone will deliver even better, but the use cases for standalone are not yet defined. As Andrea said, you know, very, very low latency, so that actually robotics, whether it's surgery or whatever, can be performed remotely. Those cases have yet to come, but the 5G that's out there is really, really good, and our geographic coverage and pop coverage is about 66% at the moment.
And is FWA really a big opportunity, as big an opportunity in the UK as it is in the US?
Absolutely. We think that it can compete in the cities with fibre, and it can compete, well, not compete, but it actually provide broadband to the rural areas, which it just would not be economic to provide fibre. So we think it absolutely can.
I'll leave you with
the big difference to the US is that the broadband prices are much higher. So therefore, T-Mobile could come up with prices which are still profitable on a mobile network, but which offered a good saving for the customer. Here, right, you get already broadband in the area of 20, 25 pounds, and therefore, right, to get really the mass market behind fixed wireless access, Robert needs to offer it for 10 pounds, and I think that is a bit a problem. So I think it will work in a certain segment, for sure, but it will not work in the mass market, especially when you think, I mean, our customers year over year are using 40% more, and so the usage goes through the roof. Nobody knows what will happen with the metaverse, with artificial intelligence, with all the services in the cloud. So I would say certain segments will use it. It's definitely a market. But it's not that we stop our fiber investment because we think there's no market for that.
Yeah.
Well,
I welcome the challenge.
one final,
really quick.
Yeah, one final statistics from me, I promise, because the time is over anyway. 82% of the UK households will have affordable, high-speed FWA if the merger goes ahead. 82% of the UK by 2030.
That's quite a statistic to end on.
Absolutely.
Hopefully, okay. Thank you so much for joining me. Please thank us.